next is pure market structure, understanding market structure. Okay, so oil is doing something like this. Prior to the move down, oil was doing this, right? And then we had price do this. Actually, it didn't do that one. It was doing this, right? And then instead of making a high, it didn't do that. And it cleaned everything. It rather did this. Okay, this is another form of market structure, and I've given you guys this as the one you look for. This is the ones that I prefer for me to come onto the chart to look for a sell, and this for a buy, right? But this is another type that when it happens, okay, it means that price is no more going to go up, I mean, for the meantime. But the reason why I don't like it is because it leaves potential equal high, so it could come back up and take a, it's not going to do that, but I don't like seeing it this way. Okay, therefore price can go up and take out this equal high. It's not going to do it, but I just don't like this one. Okay, this is high probability. If you were to scale them, if you were to put them on a scale, this will weigh 90, this will weigh 70. So I like 90, right? But oil did this, okay? And then it pulled back up again, and then it dropped again, okay? Confirming that they want to drop. So this is your highest time frame structure high, structure low. Inside this, it can give you whatever, it can somersault and do whatever, and go sideways and do this and jump around. As long as this high and that low is still intact, price can still go down. As long as it does not go up and close above this, price can still go down. So it can do whatever, like I'm drawing in here, and still valid to go down. Right? So let's delete some of this stuff. What's happened inside? This is the 4 hour. Okay, what's happened inside is the 1 hour did something like this, and then broke back down, and then rejecting, came back up, broke down, went back up, and now it's doing that. So all this that is doing is nothing but just, you know, trying to confuse people. So if you see the structure high, that is important, the structure low, that's important, it keeps you where you should be or what you should be doing. Let's go back to oil. So your structure high is here, your structure low is there. In between is just trying to mess up. The actual direction is meant to go is to come back below here. But what you need to understand is when it gets into levels that are of high probability that price can turn around, you don't want to be standing in front of the train. Okay, you don't want to be standing in front of the train. Price is not going to break through unless, okay, it has some form of a pullback in here and then go through it. So this is a target from here to there, but it can also go back inside the range again. Okay, that's why when I give targets, I keep mentioning take the target, take your TP, because if you don't take it, this can end up happening to you. And if you sell short here, can come up and stop you out. If you sold short there, can come back and stop you out. If you bought long here, came back and stop you out, right? But the actual level it needs to go is back down here. So all the somersaulting that is doing in here is just to confuse people. If he closes above this high, then that completely changes the narrative, because we've now closed above a structure high, and then price is gonna look to go up. Okay, and the reason why I'm talking about it is because I was having a conversation with someone, and I was talking about me taking a short here, and during the live session I can't take a trade, so I've missed it. That's why I'm saying what I'm saying. So I'm completely missed the trade, and that's fine. Yeah. I was looking for a sell and then hold on to for first target. That was the level for first target. And then once you break below this low, now I've got so many things I need to delete.